Hey, what is up everyone? This is Evan Carthy here from evancarthy.com. Today we are going to look at Ford, the big F for their symbol. We're going to look at their stock. We're going to see what it's been up to and where I think it's going to go based upon the setups I use for my trading that I created through meditating, which I highly recommend you all do. Got free resources on my website. Post I did goes over step by step on how I meditate to come up with a trading setup. It's by tapping into the subconscious mind. So quit giving your money away to all those fake gurus out there who don't even trade for a living. The only money they make is through selling you their crappy courses. But anyways, without further ado, let's get in and let's talk about Ford. So this first chart we have right here, this is going to be the weekly chart. It spans a little over 10 years. Just want to show what's been going on with it right here, and got some marking set up for it to go over the trades, so I don't waste y'all's time looking for where my setups are. So basically, down here we have financial crisis when all the auto major companies, or most of the major ones in the US, got bailed out. Ford being one of them, even though it was a roundabout way. Their low went down to about $1. I think it was $1.01 all the way down here. So if you had the intestinal fortitude to buy down there, you saw them very quickly. Within a couple of years, you made up well over 18 times what you bought 4050 down there. But anyways, I didn't, of course not. But anyways, excuse me. So came up and then just kind of wiggled around, come up maybe like double top. But ever since then, ever since about this high back here, back in July of 2014, you can see this trend. It's been in a downtrend ever since, and we will go over that pretty in depth here, because this is a potential trade, or excuse me, this is a trade setup that's in right now that we're waiting on to look for. And also this Ford post will go over for the blog post that I made for it as well, so the video will go in conjunction with that. So you can also view the charts on some images or some screenshots that took it as well through that. So hopefully this complements it as well, because that's what I'm trying to do is, some people like looking at it through the standstill pictures, which I have on the post, and then also through this video to help explain some of the posts better. So the first one that we're waiting on right now is a 78.6 weekly long right here. You can see there's pivot low, pivot high. Let's draw the Fibonacci levels right about there. You see right there, it came down and hit the 78.6, that purple line down there. So that locks it in right there. And we're just going to drag it up to the top, right about right there. And so this is what we're waiting on right now. This is currently not a trade that is live. You can see price has just been there's the high, bounced off the 50, back and forth, back and forth, back and forth. So what we're waiting on right now is to hit the 78.6 line down here at about 486. So where price currently is, I'll move that over a little bit here, where price currently is $9.17 right now. I definitely want to see it starting to come lower down here to the $5 range. Then I may start nibbling on the stock right here, because if the stock does go all the way back down here to its previous low around $1 right there, then the exit would move, because the first entry is right here. If it does come down and hit the 78.6 level at $4.86, then the exit is going to be the 50% Fibonacci retracement level. And yes, I know that's not a legitimate Fibonacci level, but tons of stuff happens to it, and so the way I trade for this right here, this is the X level I use for it. So I just call it a Fibonacci retracement level, even though technically it's not. So just go with it. So it's $9.98. I always have my exits a little bit lower to make sure I get out. So it'd be around like $9.75, $9.70ish to get out for it right there. But that's only if it hits the 78.6 level. If the price continues to go down even lower and hits that around dollar level, $2, $1, you'd get in definitely right there, and then the exit moves just below the 78.6 level at about 465, just to make sure to get out. So I'm not saying that wouldn't happen, but what I'm waiting for is definitely price to get closer to the $6 level, and I'll explain why here, because there is actually another setup, another long setup, where if it gets around to the $6 level, then it's looking pretty good. So that is for the weekly charts. Obviously, this could take years to happen for it even comes back down here to the $5 level to initiate this trade. So, and of course, the trade may never even happen, but it is one waiting on that setup. So now let's 8.236 potential short. Actually, that should be a long right there. That shouldn't be a short. Let me go over the daily chart right here. Alrighty. Draw the Fibonacci levels for it right there and right there. So the high we have right here is 17.68. Actually, that's definitely not going to be 17.68. 1812, 1810, close enough. And then down here we are looking at around, let's see what that is, 1672. And this is, oh, of course, yeah, I messed that up. 1674, good. All right, close enough. So what we're waiting on for this trade setup right here is, because again, you can see up here, using that pivot high, I highlighted that pivot low, price come up here at the 78.6, so that that kind of seals it in right there for the pivot points for what I look for it. Then what we're waiting on now down here is for price to come down here and hit the negative 7.236, which is actually the 8.236 extension level, but when you go to the negatives, you have to add an extra 100 to it. So it's really 8.236 if we were going, you know, up north up here that way. But when you go in the reverse way for it, for some reason, you got to take off 100% for it. So that's what we're waiting on right here for this to be a long right here. I know I wrote up here a short, but that should say long. That's incorrect. So this would be the initial one right here, $6.70, and this is another reason why I was waiting for price to get closer to the $6 level based upon this setup right here. So it gets closer to $6.70. Then after that, that's the only other entry, because you see normally in the way this is set up, this would be the next entry, but obviously it can't go down to negative $12.73. So that becomes invalid. So that is why, based upon this setup right here, I was waiting for price to get under the $7 level, get into the $6 range, hit this, and then your exit is going to be just below the negative 4.236 level at 10.86. So we would say probably about like 1060-ish, something like that around there for it. So you could even, I mean, based upon this trade setup right now, if you are bullish on Ford, if you think they have excellent prospects here in the future for what they're doing with their cars and trucks, then you could even start nibbling right now, because worst case scenario, X is going to be about $10.65 for it. So down at 917, you know, that's a decent return. And then, you know, if it keeps on going lower, 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 and then when it eventually, if it eventually hits that $6.70 level, that initiates the trade. So then you have your hard X up here for that. And then, you know, anything less than $6.70, that's almost like, as long as the stock doesn't go bankrupt, which we're not going to, because I mean the U.S. government showed that they're not going to let the U.S. automakers go bankrupt. You know, anything lower, you'd probably be pretty safe getting in. Don't worry about bankruptcy. So yeah, so that's for that setup right there. Then there was one other one. Oh yeah, and you know what actually I wanted to show by this as well. This is that downtrend I was talking about right here. Using the Schiff pitchfork. I prefer the Schiff over the Andrews pitchfork, just because the difference between the Schiff and Andrews pitchfork really is how the median line is drawn. Because you see right here, this red line, that's the median line for the Schiff pitchfork, and it gives it more of a flatter kind of roll to it. Where Andrews, let me show you, have it right here. It's more of a straight down. It's all based upon how the pitchfork is drawn. So you see how it's pretty much at a 45-degree angle right there, because the median line attaches to the top of the pivot point right there, where in the Schiff pitchfork it goes in between the pivot high and pivot low, because there you see the median pitch line right there, where it's 50% between the high and the low. So just based on when I trade, when I'm looking for like the direction of the trend and where the price is going inside of the trend, I just prefer the Schiff pitchfork, and that's also one of the indicators I use for my springboard trade, is that price has to close on one side. If it's going long, it has to close on the upper side of it, and if it's short, it has to close on the below the median line for the Schiff pitchfork. But this is the, move that out, that's going to be up over here for it. We'll talk about that here in a second. This is the 78.6 long 1 hour trade is going to be a bonus one. I don't think I put in the, I'm looking at the post right here, I did not put it in the post for it, so it's going to be a bonus for people who watch this video. But as you see for the Schiff pitchfork, this is that, if you go over to the longer range thing, this is that downtrend right here that I mentioned a little ago. That price, the Ford stock price, is firmly in right here. So if you do think like the long-term prospects and you're not afraid of this downtrend channel that's in right now, then hey, go ahead and start getting in. But based upon how it's firmly entrenched right now, there's no reason to believe that price isn't going to continue to go lower, close to that $7, $6.70 level to get you in to that trade. So who knows when it's going to break out, but definitely you can see it's in it. I mean, if you use like the reverse line looking at going short and everything, I mean, these trend lines, they look great after the fact. That's the problem with trend lines. If you try to trade on them directly, they look great. I mean, you have that trend line break right there, and price just came back down. There's no retesting it as so far as making that resistance come back down. It's just been, break and go down, break and go down. That's pretty much the way it's been all the way down. Let me show you real quick. If that's one right here, there's another one, pretty much a straight break, straight down. There's no retracement of it right there. And so what that signals is when you have a trend line break like that, and you're in a downtrend, and price didn't even come back up and test the other side and use it as resistance, it just means that there's no follow through with it at all. It's just basically break and then just give up and let it go down. And so that's why I think that after this last one right here as well, there's no reason to believe it's not going to continue to do the same thing. You have the break and then just continue to go down. I mean, it's pretty much been that way the whole time through this. Here's another one right here, break, and then pretty much just straight down. So after the last one, there's no reason to believe that price isn't going to continue. And this is something I don't like about trying to use trend lines to trade off of. It's so subjective because it looks so great after the fact, and that's what all these people try to sell you on their trend trading strategies and all that bull crap out there. It's always after the fact. I mean, it's easy to see, but I just want to show you, like for this, what's happening right here. Anytime you have a break, like there, you had a break, you had a little bit of retest back up that trend line. You see how it came back up right here, it broke out and then came back up, hit the top, used that as resistance, and then went back down. But that's really out of those last 3 times the only time something like that has really happened. So that's why I'm thinking that since this last one just broke right here and it doesn't look like it's going to come back up and retest the other side, I'm expecting, for the near term, say for the next, I don't know, all the way down to, at least till the end of this year, more weakness in Ford stock, down here, getting close to the $7 level, probably break this low, unless, this downtrend does eventually get broken. And the only way it does that is, let me show you here real quick, is looking at drawing the trend line the other way. And again, it's not a perfect science because you're going to get some false breakouts when it continues to go back down, for it, because like, look at that. Here you had one break and then price came back down, used what was before as resistance at support and came back up, but then look at that, hit perfectly off of the top shift pitchfork trend channel up there, and now it's used as resistance and coming back down for it. So just want to point that back out, why I think there's going to be for the rest of this year more weakness in Ford stock. Of course, I could be completely dead ass wrong for it, and this is the low res right now, 915, and it skyrockets back up to $15. But just based upon the history and what it's been doing in that trend line break that just happened, I think it's going to go back down close to around the $7 level by the end of this year. Let me take these off of there right quick, and let me go down here real quick to the 1 hour chart. So I'm going to show you a 1 hour long trade that it currently is in, and this is it right here, using that pivot point low, that pivot point high. Let me go make sure it's pretty close to what it should be. So the low there is 9.77, perfect. High there is 1009, 1020, let's lower that down a little bit. I don't think that's right actually. High 1020, 1019, good. All right, so using pivot low, pivot high, price comes down, hits a 0.786% Fibonacci retracement level. And that the 786 is the square root of the 61.8 level right there. I used to use the 76.4 just because it was the opposite of the 23.6 going the opposite way from the top, which is a Fibonacci retracement level. But I just, after doing some more meditation and just trying different trades out and things like that, I felt more comfortable using the square root of the 61.8, so dropping it down to the 78.6 level. All right, so we just bring this up until the 78.6 level comes and gets hit. So using this one right here as the 1041, you know what, that's not right. What is that? High 1056, 1055. All right, close enough. So here we go. Price comes down, up. Okay, here's where it would have hit the 786, but it's a huge gap down and just blew right through it. So how this trade initializes, as I mentioned a little bit ago, it hits the 786. So the first exit is the 50%. Obviously, that never happened. Came down and hit the 100%, and that moves the exit to the 78.6, and that hasn't happened yet either. So that is currently where, hold on one second, I'm going to remove the green target box from that weekly trade so we can see it a little bit better in here. So currently where price is with it right now, the exit is going to be just below the 78.6 level right there. So that's at 994. It's a little lower than that, say 990, 985. Just make sure you get out of there right now. Again, this is the hour chart, so obviously the price swings are going to be a lot less than the daily and weekly charts. But so looking at exit about 990-ish right there, just make sure that you're safe and get out of there, because the upper end is about 994, and I like using rounder numbers anyways. So 990. So price coming at 916. Have the exit at 990 for this trade, and then let me show you what happens if price keeps going down. Price keeps going down, hits 851, which is the 2.618 Fibonacci extension level. Then we move the exit down here just below the 100%, which is at 977. So I'd probably move it down to 970. Again, round number. Just make sure you get out of there just below the hard exit right there, because plenty of times I have seen plenty of times, you know, whether it's stocks, forex, or futures. Again, I trade all three of those, and cryptos as well. When I've seen price just go and barely take it that hard exit right there, and then enough to, hey, it completes the trade, hit the exit level, but it's definitely not enough volume or contracts getting traded to get you out of the trade. So that's why I always play it safe, get out a little bit early, rather than trying to hold on for every last single penny. You know, you just get up a little bit to ensure you get out, and you're going to book plenty of profit the way I trade these right here. And yeah, so after that, that'd be the last time you move it. If it hits the 2.618 at $8.51. And if it keeps on going lower, no big deal. I just have that up there, hit 724. Hey, no big deal. You can get in there again if you want to, and come back up to the exit up here about 970-ish or something like that. So again, if you're bullish on Ford, then yeah, this is another reason why you can get in right now. Me personally, this is a stock I am watching, but I am waiting for it to get lower. I'm looking at more getting closer down to the $7 levels based upon that other setup I was talking about, and it actually jives with this one pretty well, or it goes along with it pretty well. That if price doesn't, come back up and get us out of this trade before, again, look at this. This is around here at the 423.6 extension level right here. It's about $7.24. So this could be another very high support level, which is close to that previous low where that trend line just broke. Let me show you what it looks like here on the hourly chart as well. See that? That's what I just showed you on that daily chart for that trade right there. There you have the break for it right there as well. So that's what I'm looking for right down, getting closer down to the $7 level, $7.24. And this is another reason why I'm waiting for that, because I'll definitely get in, or definitely, if I remember to, try to get in right there, and then have to exit up here for this setup around $9.70. And so that's that. So anyways, hope that helped. That's the Ford Motor Company based upon the my stock forecast for them for the rest of 2019 and probably into 2020 as well. I'll definitely do another one here in 2020 for them, but this is going to cover it for the rest of 2019. All right, hope that helped. Have a good one. And if there's any stocks, futures, forex, or crypto you want to see me go over, just let me know. Be glad to do it. I trade all of them, like doing it. And all right, take care. Bye.